Economics on a Tuesday afternoon in early January, or I guess we're already getting to late January, although fortunately, one of the highlights today was that we did get the 2024 production numbers from Fortuna Mining, as well as guidance for 2025. And fortunately, to go through the results and what they're looking at in the year ahead, always a pleasure to be joined by Jorge Ganoza of Fortuna Mining. Jorge, welcome on in today. It's nice to have you back on in here. And how are you doing?
It's good to see you, and again, a pleasure to be here and sharing our news with your audience.
Yeah, well, as I think about it, it's nice, especially when we've been doing these for a couple of years, that people can see the progress of some of the things that have happened. And as we've talked about before, I know many investors were a little anxious when you had the Rock School deal back in 2021, and certainly quite a lot of progress you've made in the time since then, which does include today's results, which have record production in 2024, which obviously with the Sigua mine online for a full year makes a lot of sense. But perhaps you could start there and walk us through the 2024 highlights.
We had a strong year in 2024. As you mentioned, we had record gold equivalent production, 456,000 ounces of gold equivalents we produced. If we break the equivalency, that means we produced almost 370,000 ounces of gold, achieving the midpoint of our guidance for gold production. And silver, we delivered 3.7 million ounces. That was slightly below our guidance for the year on the back of, San Jose mine in Mexico, which in the second half of the year became erratic with production. So all in all, in spite of San Jose, we were able to record production, achieving basically the floor of our guidance range for the year, and that was good news. Also, we highlighted in our news release that in the fourth quarter, we were quite active with return to shareholders through our share repurchase program, Chris. We repurchased 6.4 million shares of the company, basically $31 million in buybacks executed in Q4.
Yeah, well, obviously, I know that's something you've talked about quite a bit of wanting to strengthen up the balance sheet, and we will dig into that in just a little bit. Although, before we get to some of the individual mines, perhaps you could give us an overview of some of the 2025 guidance that you're looking at.
Yes, we provided Outlook as we do every year, and we're guiding for 380,000 ounces to 420,000 ounces of gold equivalents for 2025. That is a decrease with respect to 2024, and it is explained by two things. One, as we announced a week ago, 10 days ago, we are divesting of the San Jose mine, which has become a non-core asset, and we can talk about that. So we will not benefit from that production. So we're losing that production in 2025 versus 2024. And also the Caylloma mine, being a silver-based metal mine, when we do the equivalencies, we do a bit of alchemy for that, and we convert base metals into silver. And as the price of silver has been increasing with respect to base metals, when we do that alchemy, we lose equivalent ounces, no? So basically, those are the two reasons why production in 2025 is guided to be below 2024. But I would like to highlight as well that for our flagship asset, the Séguéla mine, we are providing 2-year guidance, and I'm sure we'll talk about that later. And that's exciting to us. It's the first time we provide 2-year guidance. No, it's not something we commonly do. And we're doing that because we see a significant change in the production profile of our flagship asset.
Yes, yes, I did see that, and that is on my list of questions today. So we will certainly get to that. Although, one question just about the guidance. Last year, you had mentioned that your goal is eventually get to the point of being 500,000 ounce per year producer. Do the production guidance numbers you're putting out now, does that change the long term, or is that still a reasonable goal going forward and the target that you're aiming for?
No, it's our stated goal, and our production profile is changing short term, but you know when we look at our strategic plans, Chris, we're not looking to reach the proverbial million ounces of production a year right now. What we want to do is cement Fortuna as a 500,000 ounce per year producer with competitive costs and with life of mine projections that can span to a decade plus, right?
Yeah.
So we are in that path. For example, we're losing production right now. You could see that as a negative, yes, by selling the San Jose mine. But at the same time, the San Jose mine is not only coming to the end of its life of reserves and life of resources, but also it has become our highest cost mine in the portfolio. So we're losing high cost ounces, and we're replacing some of those ounces with what we're showing you in the 2026 guidance for the Seguela mine, which is new ounces that come at low cost,
Yeah.
right? So, 500,000 ounces still remains our stated strategic objective, but it's not just 500,000 ounces. It's 500,000 ounces in the low end of the cost curve for the industry, which today is around $1,500 per ounce, right?
Yeah, I like what you're saying there, especially when you think about the opportunity cost, because there can be perhaps multiple things that are profitable, but one might be more than another. So, appreciate what you shared there. And I guess since you've mentioned it a couple of times, why don't we dig into what the recent transaction at San Jose, which I think came as good news to many in the market because obviously you have and for people who have maybe not seen this yet, they, as Jorge mentioned, he did sell the San Jose mine that was set for closure, and there are some payments that are coming due as well as a net smelter royalty. Although one of the biggest things is that you were looking at $27 million in closure costs, of which now that has changed substantially. So perhaps you could walk us through the parameters and then also how that deal came about and you were able to find a partner.
Yes, I'll provide a bit of background for the benefit of your audience here who might be new to the Fortuna story. San Jose Mine has been a pillar in our portfolio. This is a project that we acquired back in 2005 as an exploration project. 2005, 2000, I first visited San Jose back in late 2005, and we have taken this from the early stages of exploration, through to the development. We built the mine, we expanded the mine, we expanded the mine again, and turned San Jose into what became one of the 12th largest primary silver producers in the world for several years, right? It was a cash cow in our portfolio. But, as many good things happen, it comes to an end as well. So we have exhausted the reserves at this mine, which does not mean that we have exhausted all the resources. We still have some remaining resources that, we believe are low margin. So we decided to strategically look for someone who could operate the mine and operate, extract value out of those remaining resources, which for us are low grade and marginal, and continue providing not only extracting that value, but also providing benefits for employees and local stakeholders, right? And as you said, for us, embarking on the closure means 6, 7, 8 years of working, I would say, playing defense. right? Closing a mine becomes playing defense. So I rather use my team, the energy, the knowledge, and relocate those resources into playing offense, no, finding those high value opportunities in the portfolio and advancing them. And that's what we have done. So we have found a local Mexican group, and that we believe are a strong fit for the new phase of the San Jose mine moving forward under these private hands, right? So it's a good transaction. It's not a transaction that we value on the merit of the money that we're getting paid right now, but rather on the cost and attention that we'll have to deploy over the coming years to the closure of the mine. So I think the group that's taking over is well suited to continue extracting value out of the remaining resources that, which I said, are marginal to us, and and um, and continue creating value for employees and local stakeholders.
Yeah, and I think you kind of touched on this a little bit, but especially not having to be there for the years it would take for that process. As we know in mining, unexpected things happen. So I would imagine that that must also be a little bit of a relief where it's not your responsibility if something does happen during that process anymore.
You know, closing mines is part of the life cycle of the business. So, but I make the reference back again with American football. Uh, you have to play defense, but it's more exciting when you're on the offensive side, right? So I rather have my A team busy with playing offense rather than playing defense, which is closing a mine for the next 5, 6, 7 years right now, right? Sometimes we do it, and again, it's part of the business, it's part of the life cycle of the mine, and we have to do it with the same energy and enthusiasm and do it well, just like we do with opening a new mine. That's the kind of energy we have to deploy when we close a mine. So I rather, if I have the opportunity, in this case, take that energy, those resources into playing offense, focusing the team and the funds we have on high value opportunities in the portfolio, right?
Yeah, that makes a lot of sense. I guess the only sad part is Dave. I know he's going to be upset he missed the football talk. Although, back to San Jose here, I noticed when you had the exploration section, you mentioned the budget for Mexico. Just when you were describing San Jose, you mentioned that you do still have some exposure there, and perhaps you could just delineate what that is for people.
Yes, Mexico is a country with a long and proud mining tradition, I always say. So for us, it's strategic to be there, even though we are divesting of our main asset in the country. But we have an exploration project in northern Mexico in the state of Sonora, the Cecilia project. And we have other initiatives on the side of exploration, in north central Mexico. So we continue active there. As you see, we have budgeted some drilling, and yeah, I mean we are not leaving Mexico. We're just closing the one operation we had, and we continue seeking opportunities there.
Yeah, and isn't Sonora, I believe, is known as one of the most mining friendly states in Mexico too, correct?
Yeah, unfortunately, I would say over the last administration in Mexico, the country became quite antagonistic with the industry, right? With extractive industries, with mining in particular. Uh, and there are some states that have this proud mining tradition and have helped defend the industry in the country, and Sonora is certainly one of them. Yes.
All right. And let us now dig into some of the individual mines, if we may. And of course, we will start with Seguela. And one of the things that you had mentioned in there, which I would love to hear you talk a little bit more about, You had the 35,000 ounces at 2.95 grams per ton gold, and the higher gold grade is in line with the planned mining sequence and is representative of the life of mine grade. And would just love to hear anything you could touch on or elaborate on in terms of grades at Seguela going forward, because obviously that's a very important asset for you, and anything you could share there.
Yes. So first, in 2024, we delivered 137,000 ounces of gold, almost 138,000 ounces of gold, Chris. That's at the top end of the guidance range for the year. So the mine had excellent performance in its first full year of operation, right? For 2025, we are guiding. We're guiding for 2 years now. We're guiding for 2025 and 2026. For 2025, we're guiding as a production in the range of 134 to 147,000 ounces of gold at an all-in sustaining cost in the range of $1,500 to $1,600. So production in 2025 is staying flat, increasing marginally over 2024, and our costs are going higher. But why are costs going higher is because we're advancing certain capital projects that will help unlock value in 2026. So when we were putting all of this together, we said it just doesn't make sense to put 2025 guidance without showing what we are accomplishing in 2026. And that's what we did. So for 2026, we're projecting annual production of 160 to 180,000 ounces of gold, but more importantly, at an all-in sustaining cost sub $1,400. Our range is $1,260 to $1,390 for that one mine, no? So 2025, in terms of cost, is like a hump, and then it comes down well below the industry average, which I say travels around $1,500 today. And production increases significantly from 137, 140,000 ounces to close to 180,000 ounces, right? So the mine is looking good. A lot of that production growth is coming from the fact that we have optimized the Seguela processing plant, and that plant is currently operating almost 35% above design capacity. That's an excellent job that the team in our West African team has delivered. But also, we're scheduling the mine in a way that allows us to increase grades in 2026 and onwards, right? So the mine is looking very strong, meaningful production, low cost, in a good jurisdiction like Côte d'Ivoire. So we are very happy with that.
Yeah, and especially since those 2026 numbers are anticipating including Sunbird, I guess that's probably got to be somewhere near the top of your list in things that you're keeping an eye on in terms of priority, right?
Yeah, Sunbird doesn't come into the production profile in 2026 yet, no? So we'll have Sunbird coming in 2027 likely. Sorry, Sunbird starts coming Sunbird starts coming in 2026, and Kingfisher, which is we have Sunbird open pit, Sunbird underground. So Sunbird underground is not even considered yet. So we have the Sunbird pit coming in 2026, and we have optionalities remaining with Sunbird underground and our newest discovery, Kingfisher, for which we haven't published a resource yet, right? And we're drilling like crazy there right now, enjoying a lot of good results, just like we did with Sunbird back in the day. So, a lot of positive news coming out of this mine, which is our flagship asset, right? So going back to your original question regarding Where are we with our strategic view for Fortuna, the 500,000 ounces? Yes, I go back. We are losing production from San Jose mine as it retires, and but those were our highest cost ounces. Those were silver ounces largely, but high cost, and we're replacing those high cost ounces with production growth at our lowest cost mine. That is what's happening here, right?
And you mentioned the Sunbird underground there. Are you able to share any timeline on the steps that go into that? Or is that still a little bit too early?
We expect in 2025 we will be producing uh, reserve numbers for Sunbird underground. No, what we have right now is Sunbird open pit, but mineralization, as you know, extends well beyond the pit limits, and that work I would say is two-thirds complete. And we will be producing reserves for Sunbird Underground this year.
Okay. And certainly from my perspective, that it's just interesting to think, especially when we look at what happened the last 3 years and then the ability to execute some of these plans. I hope that people keep that in mind because I think that's a relevant thing and certainly exciting to hear from the investor perspective. And Jorge, you mentioned in there that you have been doing some drilling at Kingfisher. You had this press release out on December 16th with the latest results, and certainly it's exciting when it's mentioned in the same category as Sunbird. So, anything you could share here to give people a flavor of what you've come back with so far?
Kingfisher is a very exciting discovery we made in 2024 at the Seguela mine. It is a satellite deposit, but it's located, what, 2, 3 kilometers away from our processing plant, right? Uh, that's the 5 kilometer radius. So we're probably closer to 4 kilometers perhaps away from the processing plant. So it was, as I say, right under our noses there. And that's our newest significant discovery. We are drilling aggressively with the aim of producing our maiden resource uh, there. And yeah, we're drilling nonstop. We have 2, 3 rigs on site dedicated to Kingfisher alone, right?
Yeah. Yeah, and perhaps that was also on my list. If you could touch on the exploration efforts and also what is ongoing in terms of specifically that could identify new targets on the property. Obviously, you already have several and you're drilling them and also exploring outside of those, but anything about the exploration program going on right now?
We have we had in 2024 a $44 million budget, which is what we executed, not a budget. Our execution and mineral exploration across the business in 2024 was about $44 million. For 2025, we're budgeting around $41 million.
Okay.
I will not be surprised if at all if we end up expanding that budget throughout the year based on results we generate. So a lot of that money is targeted for Seguela. We have, we're going to be drilling over 80,000 meters across the business. And really, a lot of that is targeted at the high value opportunities at Seguela and also at Diamba Sud in Senegal.
All right. And we'll get to Diamba Sud in just a moment. A lot that you have going on there these days, which is certainly exciting when you have the infrastructure to manage all of that, which I think that you guys have demonstrated you do. Although I did want to touch on Yaramoko, where it's interesting. It reminds me a little bit of what you said about San Jose. And I remember at San Jose, when you started in 2005, you didn't expect to go anywhere near as long as you ended up going. And similar, where Yaramoko has had a shorter life of mine, yet you've continued to extend that. And perhaps you could just give us an overview of how Yaramoko performed in 2024 and also the guidance going forward.
Yeah, that's the beauty of the business, huh? Well, all the value you can generate with the drill bit. When we launched the San Jose mine into production, it was back in 2011, no? It was first production September 2011. And when we did that, the mine was built with a processing capacity of about 1,000 tons per day. And we only had reserves for 5 years. So by 2016, we had expanded the mine and turned it into one of the 12 largest primary silver producers in the world, operating at a rate that is 3 times bigger than what we originally built. And we operated until 2024, right? So when we acquired, and that was done through exploration success, achieved through exploration success. And at Yaramoko, when we acquired Roxgold back in 2021, to follow what you were saying, the Yaramoko mine was set for closure in 2023. And through exploration success, we've been able to roll year after year life of mine. And we not only had an excellent 2023, we have had a very strong 2024, and we're projecting a very strong 2025. And as things sit today, the mine is set to exhaust reserves sometime in 2026. We continue exploring, but as they say in the financial industry, past performance is no measure of future success. But believe me when I say we continue exploring aggressively, particularly in the deeper levels of the Zone 55 mineral deposit and the QB Prime deposit, where through extensions of our underground development, we've been very successful in rolling life of mine, right?
Yeah, and I'm curious what it's like in terms of just managing that, where you obviously that's part of the business, but you have some uncertainty. Like you said, the drill will tell you what the drill tells you. Yet at the same time, there's a lot of factors to balance in managing the company and these different projects in the portfolio you have. Perhaps you could just explain how the thought process goes into putting all those together in a positive way.
Each mine has its own challenges and its own value opportunities as well, right? So as you hear me say, for example, here the key is on the exploration, on targeting the high value opportunities in the portfolio. We have a sizable exploration budget, as I just explained, of over $40 million for 2025. And a lot of that exploration is targeted to Seguela and Diamba Sud. Yaramoko has a small exploration budget because in this particular case, what's proven to be, it's not that we're not exploring, but what's proven to be most efficient in adding ounces, since we're at the deepest levels of the mine, is through extension of our underground development. And that is what we've been doing, and that's what we'll continue to do. In certain areas, we're extending mineralization just by extending and finding more continuity on the ore body. The gains are marginal on their own, right? You're not, I believe, exposed to a life-changing discovery, but we do make, we gain 50,000 ounces, 40,000 ounces, 30,000 ounces, quarter after quarter. At the end of the year, you have another full year ahead of you, right? Those are the type of gains we've been making. So it's different, for example, than what we are targeting at Seguela or Diamba Sud in Senegal, or the Lindero mine in Argentina, or the Cayoma mine in Peru. The targets are different, and you just accommodate your plans accordingly, right?
Yep. Okay, and one other question about Yaramoko. Although before I do that, I would like to mention to the audience, we're going to take a few questions today. So if you did have a question for Jorge, feel free to type that in, and I will keep an eye on that. But at Zone 55, you're coming on completion of the development operations, and that is also expected to decrease your all-in sustaining cost. Yes?
Yes, for 2025, we're looking to operate at a very competitive all-in sustaining costs. Yaramoko will be our lowest cost mine, operating at around $1,200 to $1,300 and change, right? So a lot of the underground development that the mine requires has been done already, no? So yeah, uh, Yaramoko is going to have a very, very, very profitable 2025.
Okay. And in terms of some other things that we've talked about through the past year that will be having an impact on the cost, leach pad at Lindero is almost complete now. And perhaps you could just give us an update on that and also the impact that you expect it to have. I know there's a few things at Lindero that will affect the cost structure, but would love to hear how that is going.
As you know, Lindero has a steady production profile, give and take around 100,000 ounces of gold annually, right? So that's steady. 2024, we executed a very a high capex project, a large capital project, the Lindero leach pad expansion. It was in 2024 alone a $42 million project. The project is virtually complete. We still have some $5-6 million to execute in 2025 in the first quarter, related to just final completions and demobilization of contractors and things like that. But the project began operating in October of 2024, right? On time and on budget. So we don't have those $42 million in 2025, right? Basically, the leach pad expansion serves the mine for a decade. We just had to deal with the $42 million investment in 2024. Moving into 2025, the project is largely complete. We don't have that high capital project anymore. But what's offsetting really some of the benefit of getting rid of that large capital investment is the fact that the stripping ratio is going from 1 to 2. We'll have to move twice the waste to access ore in 2025. So that impacts our cost. Our stripping ratio peaks in 2025 at 2 to 1. We currently operate at around 1.1, 1.2 to 1. 1.1, 1.2 tons of waste per ton of ore. And that will peak at 2 tons of waste per ton of ore in 2025, and then comes down again to around 1.4, 1.5, and goes on for the life of mine the next decade. But 2025 is the peak. So some of the benefit of taking out the high, $42 million investments we did in 2024 are being offset by the higher waste we have to move in 2025. Still, the mine will operate at a lower cost, steady production. So it's turning into a steady producer at a cost at around, I would say, $1,600, $1,650.
And speaking of cost, any general changes in terms of inflation and prices that we've seen, or has it been a challenge to keep up, or is it a little less chaotic than what we were experiencing a couple years
Yes,
back?
I would say it's been less dynamic on the inflation we see on consumables, on some of the services. I would say the only place where we have seen some inflation creep is with our West African contractors, mainly mine contractors. But outside of that, and all of that is already factored in our costs and the costs we provide in our guidance, but all in all, I don't see the same type of inflationary pressures we seen, 4 years ago, 5 years ago, 3 years ago. No.
Okay. Well, be prepared. Our policymakers in the U.S. are doing their best to change that. But we will deal with what's in front of us for now. And I do have a few questions coming in. Neil, you're next in the queue, although we will start the question from Dave K in Denver. And he mentions he knows you've talked about this before, but he likes to get his update. And assuming the Diamba Sud resource estimate and the subsequent economic support a construction decision, anything you could share about a timeline, maybe any changes to that so we can have our friend Dave sleeping well at night.
Yeah, Dave is always pressuring me on the ambassador. The ambassador is going through its phases, and the work that we have done through 2024 has been most valuable to rebuild the geologic model and have a sound foundation for a resource estimation, and therefore the base for a good economic study, right? So we need to, if everything goes accordingly, you know, I would say that by the second half of 2025, we could be in a position to look at a definitive feasibility study or advancing some early works towards a construction decision, right? But we're drilling. We have a close to $9 million drilling budget allocated in 2025, and we are making the resource we inherited from the acquisition our own, based on a sound foundation of a geologic model, right? And that's the first step, and that's very important. And as you know, Chris, we in our business see many projects falter, and many times they falter because the foundation is not done properly, which is a proper geologic model. So we have taken a lot of care as we have taken ownership of this project, which we like very much. We like the potential, but let's make sure the foundation is solid, and that's a solid geologic model, and that's something that we have achieved through 2024, and you'll cement the work onwards.
That makes sense. I'm curious, it's been, I think, about a year and a half or so since you guys did that deal. Does that sound about right? I know it's
We did it in late 2023.
yeah, yeah. So somewhere around a year and a half, maybe a little less. I'm curious if there's anything that has changed substantially of what you thought about it and what you've learned since then versus your impression when you did the deal, or has been about what you expected?
No, no, no. We knew the geology was complex, and it is. It's complex geology. That's why building a strong understanding and foundation for the geologic model is key for a good resource, right? And we are still in love with the exploration potential. We're only a few kilometers away from the Lulo-Gunkoto complex, which, we're sitting on the same rocks, on the same structural regime. Uh, we're very excited about the opportunities that lie in that property package. And again, we're drilling nonstop, right? So no, we're very excited about the project.
Okay, and I would say with good justification. And last question from Dave here. Again, if the resource update supports a positive determination, what is the time frame looking like on potentially expanding the mill at Seguela?
That is a good one, because we had in our internal KPIs, and how we measure ourselves, devising an expansion for Seguela in 2024. But you know what? Through optimization, we have taken the processing plant from the original design, which was for 1.2 million tons of ore treated per year, to 1.7 million tons of treatment capacity per year, right? And all of that has been achieved through optimization of the system. we have been able to capture all of the opportunities that are built into the design. And so I'll ask David to give us a small breather because it's only now that we are getting stable at 1.7. We have extracted 35% higher throughput capacity, and that is what's unlocking the opportunity to produce almost 180,000 ounces of gold in 2026, which is what we just guided, right? But more importantly than the 180,000 ounces of gold, we're going to do it at a cost that's sub $1,400 per ounce ASIC, right? So I'll ask David to have a bit more patience with us on that one because we haven't finished harvesting the benefit of the optimization yet, and he's asking for another optimization. I like that pressure, but I'll ask him to give me a small breather.
Well, I'll relay the message. His football team got knocked out a couple weeks ago, so he needs some good news. Although, fortunately, I think the San Jose news that you released did he was quite excited about that. And we have a comment from Thomas Beslanovitz. Hopefully, I said that correct. Thank you for the comment, Thomas. And he just mentions, I think what they did with the San Jose mine is fantastic. Could not ask for a better outcome. So appreciate that comment, Thomas, and um, well done and the deal there. And the other question that came in, this is from Neil. He was asking about the types of relationships you have with the countries in West Africa. Obviously, there are three that you are currently involved with right now. Anything you could comment there? And then perhaps, I don't know if there's other ones that you're investigating that you're able to talk about, but anything you could share for Neil there.
Yeah, Africa is a very, very, very large continent. We're focused on West Africa in that small geography. And as you mentioned, we operate in Burkina Faso, Cote d'Ivoire, and Senegal. We do look for opportunities in other near neighbors within the West African sphere. And I would say the government relationships are good. The country that today provides more uncertainty, I would say, is Burkina Faso. No, Burkina Faso is going through several challenges. They have a conflict, an internal conflict, where the government is fighting off the jihadists that come from northern Mali, from the Sahel, across the border. So they have a security crisis. They have a humanitarian crisis. It's a group that's dealing with a lot. But listen, today our chief operating officer and vice president of external relations and the finance team are in Ouagadougou, the capital of Burkina Faso. We meet with the authorities regularly, and we have a good working relationship. It's a young administration, I would say. The leader of the country today is a young captain, no, that took power by force a year and a half ago. Uh, so that presents its challenges. But hey, listen, we are a company that is comfortable playing in the frontier. I would say that in Burkina Faso, for example, we're not looking to expand our presence today. We're happy harvesting what we have at Yaramoko. It's not a place where we're looking to grow our business. The more coastal countries like Cote d'Ivoire or Senegal are far more welcoming today to continued investment than, say, Burkina Faso. But even though those challenges are there, the relationships are good.
Okay. And I think certainly that's an advantage, especially if you have a place where many people are scared off from and you do have the expertise to navigate it successfully can be a good opportunity, which I think has certainly turned out to be the case here.
Yeah.
And we did have one other question about where did it go? Oh, yes, we have a question. Is there any update on the VAT recovery in Burkina Faso?
Yes, we had a small recovery of VAT late last year. One and a half, $2 million were returned. Again, this is a country that's going through a grave security, humanitarian, financial crisis. So, our senior leadership, West African leadership, is in Ouagadougou today, speaking with the Minister of Finance, interacting on VAT recovery. I would say that it's not an easy one, VAT recovery today. It's not an easy one, huh? Yeah.
Okay. Well, I appreciate you commenting on that. And I will mention to the audience, if anyone had any final questions or if I missed it, please type it in again before we wrap up, and I will get to those. Although we did have a question from our friend Peter, and I'll add a second part to this. But Peter was asking, when the window of opportunity to buy cheap assets will close. He's talking about how many juniors are selling for next to nothing. Are you looking at acquisitions? Again, I understand you can't maybe certain things you can share publicly or not. I guess the
No,
I guess the
but
other part to that is just if you've seen any change in the conditions. I know you've said in your career this has been one of the possibly the toughest market conditions you've seen, and I'm wondering if that's changing at all. And also, like Peter said, if there are any things you're looking at given where we stand now.
I can make a general comment, which is we do see a lot of value in the space with respect to the junior explorers and developers. Uh, and yeah, there is a real gap between the underlying commodity or precious metals, in this case gold, and where the valuations are. And some juniors are quite distressed. So yeah, there are opportunities there that we monitor closely. Uh, yeah, but this is a very difficult market for mining equities yet. We have not seen the catch up take place yet with respect to where gold is
Yeah.
or silver.
Well, we will watch and wait. It's fascinating to see especially the gold price where it is and see it not filter through yet. But
The mining equities investors are being put to the test.
well,
Where you have to be a real contrarian uh, to be here, and that is fine. I am by design a long-term investor in the sector, in the industry, in the business, in Fortuna. But certainly we're all being put to the test, right? Or
well, like
resolve is being put to the test.
yeah, and certainly like you mentioned before, you're long gold and silver every day. You don't get a chance to put a hedge in place. And although again, I think that your personality and skill set is well suited for that. And that's whenever something is difficult, that also creates an opportunity for someone who is able to navigate those waters. And I suppose last question I will ask here, with obviously Trump is now the president in the US as of yesterday, and we don't need, certainly if you have any comments on his policies, feel free. We don't need to dig into all of his economics. But I'm just curious, is there anything that he's been planning or with his transition that impacts Fortuna in any way? Now, you're not a US based company and you don't have a mine in the US, so it would seem like there's not as much direct impact, but I don't know if there's any ways in some of his policies affect other countries or counterparties. And just curious if there's anything you've had to prepare for with that or keep an eye on.
Well, whatever the new administration does eventually has an effect on the world, right?
Mhm.
How the if the tariffs eventually go in place, inflation, it will impact rates. Rates will have a bearing on the direction of gold. So, I think it's so much an interconnected world these days, right? Uh, I would just say that I am very curious about the technological complex and the cryptocurrencies, the valuations that we see there, because he certainly continued to fuel some of that, which today, to some observers, can be thought as exuberant valuations, right? And I believe gold remains a good store of value. And I am curious, as I said, to see how this all unfolds, because Mr. Trump certainly is a strong advocate of cryptocurrencies and all of that, right? So, I think the returns that people have achieved in there are tremendous, and praise them for that. But I'm just curious about that. No, what's going to happen as he continues to throw fire into that fire, right? And because gold is going up in spite of things that you might believe are contrarian to the dynamics that have been governing the gold price lately. That's probably fear, concern towards uncertainty, right? Gold is over $2,700 today, and why? Because the tariffs, not the tariffs. Uh, I don't know. I'm just very very curious to see how all of this unfolds. Yeah.
Yeah, I think that's a great point because the $2,700 gold, is also the distinction of we had $2,700 gold a couple months ago, but ever since the Fed started cutting rates, we've seen the dollar index rise. It was over 9% in 3 months while the Fed's debasing the dollar. So to see the performance of gold and silver hang in there while that's happening, I'm of the school of thought that before this is said and done, if they do go through with cost cuts, I would be willing to bet on the deficit growing larger rather than smaller. And then you add in the fact that he's told countries that want to de-dollarize that he's going to kick them out. And I wonder if they're turning to gold now because they've seen sanctions and other U.S. policy. Seems like a delicate mix of things. And go ahead.
Uncertainty, uncertainty, uncertainty. And people are increasing probably smart money flowing, and increasing their participation in the gold, and that's probably what we're seeing, right? I think we're coming into an uncertain period of uncertainty, and I'm just curious to see how all of that unfolds as an observer, right? Yeah.
Yep. Well, Jorge, again, I congratulate you on the record production in 2024. I would imagine, and hopefully that feels really good for you, taking the steps when you were catching heat for it a couple of years ago, and then to bring your plan forward. I think you have a lot to be proud of, and it's really a pleasure for me to be able to sit here and have these conversations and follow along. So I congratulate you, and I hope you take some time to reflect on the great things you've done these past couple of years, because especially at the time you've done it, when we had the inflation, we have a bunch of other things going on. You've had power outages in West Africa, and I think that's why the company runs the way it does, because I think it was before we hit the record button talking about how, maybe if anyone has a perfect deposit, they can go mine it, but overcoming those challenges, I think has served you well. So, um, go
We
ahead.
couldn't done it with an A team. I'm really, if there is something we're proud of in Fortuna is the quality of the people I work with, and over 5,000 people that make Fortuna happen every day at the mines, right? And yeah, very good. Thank you very much, Chris.
Sure. And actually, one quick last one. Do we have a date yet for the earnings release?
It's gonna be early March,
Okay.
early March for Q4 financials. Yes.
All right. Well, we will certainly be looking forward to digging through those with you. And anyway, we will wrap up, but I thank you again for joining me. And I know people always appreciate being able to hear from you and also get some questions in from time to time. So, congratulations again. And also, I thank everyone at home who joins us for these calls and makes this show possible. So, hope everyone had fun. Go out there, have a great afternoon,